Welcome back to my channel. I am a value investor and I like looking for companies that are diamonds in the rough, gems that not every investor is looking at, especially not on CNBC or one of those big channels. Nothing against those channels, I watch them as well. But I found a really nice gem in Catalyst Pharmaceuticals some time ago, and I wanted to go through and update my analysis on this company. They announced their earnings recently, and boy, the stock really took off because they really did well. They are profitable, they're growing just really fast, and the market cap is just really low, which is really good. So I'm going to take a look at Catalyst Pharmaceuticals. I'm going to take you through my process that I use as I look at a company and decide whether I should buy a stock, hold a stock, or sell a stock if I'm already an owner. Do me a favor and like my video and subscribe to my channel. I'd really appreciate that. Now let's take a close look at Catalyst Pharmaceuticals. So what's my process in looking at a stock and deciding whether I'm going to buy, whether I should sell a stock, or just hold a stock? Well, let me share that with you. It involves just a simple process, but I try to go in depth in each area. The first area that I evaluate is the company. I want to believe that the company is a good business to own. It could be a business that's growing. It could be a business that's just going to be around for a long time, very profitable, generates great free cash flow. So I have to be an investor in that business, not in a stock. I have to really like that particular business. And I like the industry as well. The industries that I like, I tend to really focus on and try to know which players are strong, which players are weak, which ones are going out of business, and which players are going to be in for the long haul. And I want to know that the management team's doing a good job operating the company and performing well. You can have a really good company, really good industry, terrible management team, and they'll run that business into the ground. The balance sheet. The balance sheet tells me how many problems the company has, and the debt. The debt's really important to keep down. Really strong businesses, if you look at the Magnificent Seven as an example, those businesses do not have any debt. They're so strong, they have so much free cash, they just pay off all their debts. So that's a sign that a company's strong. If they have a lot of debt, that's a sign of weakness. I want a discount on the stock. I don't invest in stocks just as a hobby. I invest in stocks to make money. So I want to buy a stock that's discounted. Catalyst Pharmaceuticals created a medication, a therapy for LEMS disease, which is a disease that affects a lot of people, affects their nervous system. And this company really brought a treatment to many people that needed it. It's a successful treatment. It's being recommended, prescribed to many people. And that's really the principal reason why Catalyst has been growing. The company's also acquiring the rights to sell other drugs, as well as just acquiring other companies that are developing drugs as well. So this is a rare company where their first drug became a success. So they're already commercially successful and they continue to grow their pipeline. Very good move. I think that this company could be an acquisition target by a large pharmaceutical company. But if they're left alone, they're going to continue to grow, which is really exciting for the company. The company fundamentals look really good just from a glance. The stock has been up 17.92% in the last 30 days. And the reason for that is their earnings came out, they were really positive, and the stock really shot up. So it's great to be a stockholder of Catalyst. It's been a fun couple of weeks. The market cap for the company is really low, just at $1.9 billion. And keep in mind, the revenue for the company is almost 400 million. So you're pretty much buying the company for 5 times revenue. That's a really low acquisition of a company that is already profitable, generating free cash flow. Their forward PE is nice and low at 14.89%. It's a really low PE if you look at other PEs for companies, let alone this company's growing. So those things really look good. The analysts that cover it have a strong buy. Only 4 analysts cover it. So this is a small stock. It's not going to be covered by everybody, as you would imagine. And the company recently, one bit of bad news was that they recently issued out more shares, and they did so they could acquire another company. Shareholders didn't like that. They felt that they were liquidating the company to some extent, which I understand, but they did acquire another business with those funds. Now I'm going to value the company based on free cash flows and also value the company based on earnings per share value, and then see what I believe is a blended value for Catalyst Pharmaceuticals, see if it's discounted or if it's being sold at a premium. First, let me give you some historical information on the company. Based on the last 4 years, their free cash flows have grown 45%, which is really good. And based on the last 4 years, the revenues have grown 41%. Again, very, very good. Now, I'm not going to expect that they're going to grow free cash flows into the future at 45%. That would be incredible. Instead, I'm going to go more conservative at 15% for the first 4 years. And then after the fourth year, grow free cash flows by 4%. The first method I'm going to use to value the company is the free cash flows I expect the company is going to produce. In 2023, they produced 143 million. So I'll have that as a starting point. And then each year will grow by 15% for the first 4 years. And then terminal value, which is the last bucket here, it's going to grow at 4%. The intrinsic value based on all those free cash flows that I expect in the future, discounted at 11% weighted average cost of capital, is $2.46 billion. I'm going to add the cash on the balance sheet and take away debt, but they don't have any debt. So the equity value of the company is $2.6 billion. The market cap of the company is only $1.9 billion. They have 108 million shares outstanding. So the intrinsic value per share is $22.94. Their stock price is currently trading at $17. So it provides a nice discount of 35% on Catalyst. If you look at free cash flows, now their earnings per share is expected to be about $1.19 per share. I'm going to use a PE of 18. That's a conservative PE. Since they're a growth company, they may be valued even higher. Based on that PE and a growth rate of 4%, I'm going to get a value of the stock based on earnings per share of $18.27. Current stock price is 17. So earnings per share yields about a 7% discount. I like to weigh free cash flows more because I believe that's true value of a company versus earnings per share. So I use 2/3 of the weight of free cash flows, 1/3 of earnings per share. So I get a blended value for the company and a blended discount of 26% on Catalyst Pharmaceuticals. No matter what market, there's always an opportunity to find a diamond in the rough, something that people are not appreciating and then buying it at a great price. And looking at Catalyst Pharmaceuticals for the past year, you can see that it's currently trading at $17, but not too long ago, it was trading at $12. So it just provided really good value. And the fundamentals are there. It's a growing company, producing free cash flows. So here's an example of such a company, such a diamond in the rough that people didn't appreciate. And now the market's really recognizing it and it's really taken off. So it's good to have volatility. I like volatility because it provides for really nice low points in order for me to buy more shares in a company that I like. So that's been the case with this company. It's been on a really nice rise lately and it provided really nice purchase prices in the last 12 months. So should I buy more shares in Catalyst Pharmaceuticals or just hold my shares? Well, let's take a look at the company. So first, I think the company is excellent. It's great that their scientists are brilliant and they're helping a lot of people with the rare diseases that they have. So I really like that. I think they're an innovator. They're in an industry that I've always liked. I like pharmaceutical because pharmaceuticals, produce really good cash flows. The successful pharmaceutical companies become really valuable. They generate great dividends and so forth. So I like the industry. And this company is really well operated. And they're not really sitting on that one uh, um, medicine that they have. They're growing. They're acquiring other businesses so they can continue to be bigger and make their enterprise value that much larger. So I'm just really, really happy and like the business. The balance sheet's in great health, no debt. So that's great. They generate free cash and they don't have any debt. And they offer a nice discount on the stock. So they get check marks across the board. It's a nice, really nice company. So I'm going to continue to buy shares in Catalyst, especially in down days and when they have pullbacks on the stock. That's when I buy. I have a good position in the company and we'll continue to add shares to that position. That's my analysis on Catalyst Pharmaceuticals. I hope you found it interesting. Do me a favor and like my video and subscribe to my channel. I'd really appreciate that. And please leave a comment on Catalyst Pharmaceuticals. Again, thanks for watching. Good luck investing in 2024.